This is Nightly Business Report with Sue Herrera and Bill Griffin.
High-stakes summit. World leaders arrive at the G20 meeting, and while trade is top of mind, oil could throw investors a curveball.
Pay gap. A new study shows that the amount women earn when compared to men is a lot lower than previously thought.
Say cheese, why Delta wants your face to be your passport when boarding a flight. Those stories and much more tonight on Nightly Business Report for this Thursday, November 29th.
And good evening, everybody, and welcome. The world's leaders are gathering tonight in Buenos Aires for the G20 summit. The stakes are high, both economically and geopolitically. President Trump and China's President Xi Jinping are expected to meet to discuss an issue that has contributed to big market swings and has left investors hanging in the balance, and that issue is trade. Many want to see tensions eased between the world's two largest economies, but as Eamon Javers reports, there's a lot of uncertainty surrounding these talks.
As the city of Buenos Aires prepared for its first ever G20 economic summit, President Donald Trump and his top trade negotiator raised the prospect of new global tariffs rather than scaling back the duties currently in place, as many investors had hoped for. President Trump tweeted about the prospect of raising tariffs on European cars. The president has great power on this issue. Because of the GM event, it is being studied now, the president wrote. And his top trade negotiator issued a statement saying the United States would consider new tariffs on China, too, saying the Chinese side has not come to the table with meaningful concessions. At the president's direction, I will examine all available tools to equalize the tariffs applied to automobiles, wrote Robert Lighthizer. To add to the uncertainty, Trump told reporters he was still unsure about pursuing a trade deal with the Chinese.
I think we're very close to doing something with China, but I don't know that I want to do it because what we have right now is billions and billions of dollars coming into the United States in the form of tariffs or taxes. So I really don't know, but I will tell you that I think China wants to make a deal. I'm open to making a deal. But frankly, I like the deal we have right now.
All that came against a backdrop of scandal back home as the president's former lawyer, Michael Cohen, pleaded guilty to lying to Congress about his involvement in negotiations with the Russians over a possible Trump real estate project in Moscow during the 2016 campaign. The president responded angrily to that news as he departed for Argentina, saying his former confidant was simply lying. With all of that uncertainty in the air, many experts back in Washington have concluded that the best possible outcome for this G20 summit is simply a trade truce in which both the United States and China agree to stop raising tariffs on each other and hammer out all the details of a trade deal in the coming months. For Nightly Business Report, I'm Eamon Javers in Buenos Aires, Argentina.
Now, while the world focuses on trade, oil policy is also likely to be discussed at the G20. Since some of the most influential players in the crude market will also be in attendance. And they have been faced with an oil price collapse that has pushed U.S. crude down to $50 a barrel, which it briefly fell below in today's trading. Joining us tonight is Halima Croft. She's Global Head of Commodity Strategy at RBC Capital Markets. Halima, always good to see you. Thanks for joining us tonight.
Thank you for having me.
In the past, when prices go down as much as they have the last couple of months, it's simply a case of OPEC then cutting production to try and shore up prices. But it won't be that easy this time, will it?
Well, I mean, certainly we're looking at an OPEC production cut next week. That is the expectation when the producer organization meets on Thursday. But there is concern that President Trump's relationship with Saudi Arabia and the fact that President Trump keeps calling on Saudi to keep the taps open may mean that Saudi at the last minute decides to, follow Trump instead of pulling the barrels from the market. So we're going to be watching very carefully to see what unfolds over the next couple of days. And we're likely to get signals from the G20 because we're going to have Russia and Saudi meeting on the sidelines of the G20 and discussing the potential contours of a production cut deal.
And how do you think that will work out? Because it seems to me that if you put the Trump administration's relationship with Saudi Arabia aside for a moment, it really comes down to Russia and Saudi Arabia.
It absolutely comes down to these two countries. I mean, they were the two that decided in June to basically put a lot of additional barrels on the market. We've seen this real surge in supply from Saudi Arabia and Russia since the June OPEC meeting. Now, this was done ahead of the Iran sanctions. There had been an expectation that President Trump was going to be very, very tough on Iran. And some are saying now that the Saudis in particular were surprised by the fact that the Trump administration gave 8 waivers to countries to allow them to continue to import Iranian crude. So there's now a question of whether Saudi Arabia essentially oversupplied the market at the request of Trump and now has to roll that back.
And of course, this has an impact on U.S. oil producers as well, even though the president would like to see prices go even lower, right?
Yeah, this is the interesting contradiction of the Trump policy, because on the one hand, he really does want prices to go lower. He keeps saying, like, Saudi Arabia, keep the taps open, push prices down. He sees this as a tax benefit, a tax cut for U.S. consumers, essentially. But on the other hand, if prices fall below 50, that's going to hurt the U.S. shale industry. And a number of U.S. shale producers are big supporters of President Trump. So that's the quandary. How do you help the U.S. consumer while at the same time supporting a very important industry in the United States?
Indeed, something we'll watch very carefully, as you said, over the next couple of days. Halima Croft with RBC Capital Markets. Again, thanks for joining us tonight.
Thank you.
On Wall Street, stocks took a breather after yesterday's sharp rally as investors watched and waited for the G20 summit to take place. Now, they also digested the minutes of the last Fed meeting, which we'll have more on in just a minute. So by the close, the Dow Jones Industrial Average fell 27 points to 25,338, snapping its 3-day win streak. The Nasdaq was down 18, and the S&P 500 declined by nearly 6.
And a number of economic reports were out today. They gave investors a better sense of how the economy is doing. First, consumer spending came in better than expected. Purchases rose by 0.6% in October, giving the biggest part of the economy a solid start to the quarter. It was a different story, though, for pending home sales. Contract signings to purchase previously owned homes unexpectedly fell by about 2.5% to a 4-year low, providing more evidence that the housing market is starting to struggle. And on the labor front, first-time unemployment claims rose by 10,000 last week to a 6-month high. That could raise concerns that the labor market, while still historically tight, may be starting to soften.
And now those minutes from the Federal Reserve's last policy meeting. It gave investors more insight into the central bank's thinking on the economy and the path of interest rate increases. Steve Leisman is in Washington tonight.
Despite being overshadowed by recent speeches from the Fed chairman and vice chairman, the minutes to the Fed's November meeting released Wednesday still provided some clues about the direction of the central bank's interest rate policy. While Fed officials overall were upbeat on the state of the economy and the outlook, the minutes show a lot more concern about downside risks than were revealed when the statement came out back in November. Officials worried, for example, about tighter financial conditions, that is, both a rise in interest rates and the decline in stock prices. They also worried about the slowdown in global economies and a slowdown in sectors like housing and autos in the U.S. that are most sensitive to interest rates. And while the minutes back up the idea that the Fed will likely raise rates by 1 more quarter point in December, they raised questions about how much hiking the Fed will do in 2019. At least a couple members of the Fed's Open Market Committee said the Fed was already at or near a neutral interest rate that would neither speed up nor slow down the economy. In fact, there appeared to be agreement that future policy statements would drop the phrase saying further gradual increases in rates are needed. Instead, they'll emphasize that those increases depend on the economic data and on the outlook. The significance of all of this is to show that Fed Chairman Jerome Powell's more dovish outlook, which sent stocks surging, has support on his committee. What it means practically, a rate hike is coming in December, but little is certain after that. For Nightly Business Report, I'm Steve Leisman in Washington.
Time to take a look at some of today's upgrades and downgrades. We begin tonight with McDonald's, which was upgraded to overweight from equal weight at Morgan Stanley. The analyst cited the company's modernization efforts and margin expansion. Price target now $210. The stock rose in trading today to $189.26. Fellow Dow component Boeing is Cowen's #1 aerospace pick for 2019. The analyst says that the airplane maker is in a production sweet spot right now. Price target $445. The rating remains a buy. The stock rose more than 2.5% today to $342.56.
American Express was downgraded to neutral from buy at Buckingham. The analyst cites a, quote, blurry macro outlook along with the stock's valuation. The price target is $112. Shares of the Dow component fell more than 1% to $111.31. Apple's price target was cut at Canaccord Genuity to $225 from $250. The analyst cites soft smartphone demand and disappointing initial iPhone XR sales. The firm maintains its buy rating on the stock. Shares fell in trading today to $179.55.
Still ahead, how DHL is speeding up delivery time with fewer workers. German police raided Deutsche Bank's offices in Frankfurt today as part of a money laundering probe. 2 bank employees are suspected of helping clients set up offshore businesses to launder money from criminal acts. The officials seized documents having to do with the so-called Panama Papers, which was a leak of millions of files detailing offshore accounts. Shares of Deutsche Bank fell more than 4% in trade today.
The German firm Bayer plans to cut 12,000 jobs as part of a corporate overhaul following its acquisition of Monsanto. The company says a significant number of the cuts will come from its German operations. Bayer is also considering selling some assets, including its sunscreen business Coppertone and its footwear brand Dr. Scholl's. Bayer has been dealing with the financial fallout from a trial involving Monsanto's Roundup weed killer.
Meantime, another company back here at home cannot find enough workers. When have we heard that before? And because so many jobs were going unfilled, shipping company DHL decided to invest in a facility that needs fewer employees, and it's actually speeding up delivery times. Frank Holland has the story for us from Avenel, New Jersey tonight.
These parcels and packages all part of the booming e-commerce market. But just as the online opportunities are growing, the labor force to process all these orders is shrinking. In response, DHL built this new $20 million automated facility in northern New Jersey.
The expectations around e-commerce have changed dramatically over the last several years. This is a much tighter labor market than it was just a few years ago. Wages are going up, and we needed to find a way to be able to adjust to that in the marketplace.
Lee Spratt, CEO of DHL e-commerce, says this 190,000 square foot site is one of 3 in the U.S. that can process 60% more than the company's non-automated sites. DHL says the automation allows them to move more packages in less time with less mistakes. Every day, 40,000 packages like this one get shipped out. DHL says they average about 3 pounds, and the majority are from mid-sized, online-only retailers.
The benefit of our business and being somewhat of a niche player is we're very fast and flexible.
Speed is especially important as customers want what they bought faster and faster. DHL takes orders like these and then ships them directly to the closest post office. Your local mailman handles what's called the last mile of delivery. Right now, the post office, UPS, and FedEx control about 95% of the e-commerce home delivery market.
We really don't try and compete with them in their segments. What we're really good at is providing a very customized solution for that mid-tier e-commerce merchant.
For Nightly Business Report, Frank Holland in Avenel, New Jersey.
Abercrombie & Fitch forecasts a jolly holiday quarter, and that's where we begin tonight's market focus. The retailer reported profit that more than doubled in the most recent quarter. It also posted stronger than expected sales growth and reduced the number of stores that it planned to close. The company says sales in the current quarter will be better than expected. That sent the stock up more than 20% to $20.70. Dollar Tree said tariffs will have a minimal impact on its operations this year, and that alleviated some concerns and overshadowed the surprise drop in same-store sales at its Family Dollar unit, and the stock gained 6% to $88.43. Express cut its profit and earnings guidance for the year. That retailer cites heavy discounts and slower than expected foot traffic in stores. The company's outlook is what investors focused on instead of its better than expected earnings, and that sent the stock lower by 5% to $6.80.
In Yeti's first earnings report as a public company, it beat profit estimates and provided an upbeat outlook. However, investors did not like its sales numbers, which were a bit shy of expectations due to weakness in its luxury coolers business. And the stock cooled off today, falling 16% to $16.10. Meanwhile, Unilever's CEO is retiring after a decade at the helm of that company. Paul Polman angered shareholders earlier this year with a plan to move its headquarters to the Netherlands. He later abandoned that proposal, though. Polman will be replaced by the head of Unilever's beauty unit. The stock fell a fraction today to $54.52. And Jack in the Box is reportedly exploring a sale of the company. According to Reuters, the hamburger chain is looking at all options after divesting its Qdoba Mexican restaurants brand earlier this year. Potential buyers include private equity firms. Shares rose about 6% on that speculation today to $88.54. And GameStop slashed its full-year profit outlook despite strong sales during Black Friday and Cyber Monday. The company cited weakness in sales of certain titles and less demand for pre-owned games. Shares dropped sharply in initial after-hours trading tonight, extending the 2.5% decline that we saw during the regular session.
A new study from the Institute for Women's Policy Research says women earned just 49 cents for every dollar paid to a man over a 15-year period, and a big difference from the commonly cited census data of 80 cents on the dollar. Heidi Hartman is co-author of that report and joins us now to discuss her findings. Welcome, Heidi. Nice to have you here.
Thank you.
The difference seems to be in this metric. The Census Bureau has a short-term metric of 1 year, whereas your study took more of a career-long outlook, and that dramatically changed the results. Tell me about that.
That's exactly right. We feel that when you look at only 1 year, that's a measure for women and men who both work full-time year-round. And not very many women do that. About a quarter of women do that over a 15-year period, and only about 3/4 of men. But still, you get a lot more men in that equation if you're looking at full-time year-round. So looking at it at 15 years, from the point of view of the woman, you're saying to yourself, gee, what am I really earning? What am I taking out of the labor market and bringing home to support myself and my family? So we kind of call it in the report the bringing home the bacon wage gap.
Right. Now, is this a gender discrimination problem, or is it a policy problem? For example, you know, if I want to take time off, it'll seem a little unusual where it's not for women. And when women come back, they often make less money after they've been off for a while. Maybe if I felt like I can come back and to the same salary, men might want to do the same thing. Is that part of the problem as well, do you think?
Yes, absolutely. One of the things we've found is that both men and women suffer if they take any time out of the labor market. And in this country, we have very few supports for men and women if they want to spend time in education, financial supports, child care supports, elder care supports. If they want to spend time in education or doing that family care, taking any time out of the labor market, they don't always have a job to go back to, and certainly not at the same rate of pay. Other countries that we're competing with that are at our level of wealth, they are providing families and workers with these supports. So we do feel that's a lot of it. One thing that we could do is change our public policy, make it more possible for men and women to take time out of the labor market, to provide that family care, have a job to go back to, and have some income while they are out of the labor market. That's what our competitors do.
The results are so dramatically different than the Census Bureau study that comes out. Does it change the conversation, do you think, because of the dramatic difference in wages earned over your long period of time versus the Census Bureau? Do you think it starts the conversation in a different place?
I think it does. It's certainly getting a lot of attention, and that somewhat surprised me. But 50% is a really low number. You know, to say that the wage gap is 51% and women are making only 49%, that is a big number, and that does get people's attention. I think it points to what the feminist economists call provisioning. What is the purpose of the economy? Is it to make a profit? Not necessarily. It's to make sure that everyone survives, that they all have a way to provide for themselves and their families. And if you look at it that way, then yes, this is what men and women are able to take out of the labor market to support themselves. And why is that? It's a structural problem. Yes, it's a common problem, but it's something that we can control through public policy. The idea that employers do kind of downgrade people who have taken time off. They consider them maybe disloyal. And even, during the Great Recession, when we had so much unemployment, we realized that firms were using these automated resume screening devices that were throwing out anyone who had any unemployment. Well, that kind of unemployment, when it's so high, that's not disloyalty. And when you're taking time off to be with your baby, to be with your parent, to go to school, that's not disloyalty. You are a productive worker, and you need some help staying productive and keeping yourself in the labor market.
Well, we will keep track of the conversation, Heidi. Thank you very much. Heidi Hartman with the Institute for Women's Policy Research.
Thank you.
Coming up, now boarding, why all you need to get on a plane is your face.
Now that the CVS-Aetna merger has closed, the CVS CEO plans to change some stores, devoting more space to healthcare services like nutrition counseling and blood draws. The idea is to offer more clinical services at a lower price. He explained his vision during an interview with our Bertha Coombs.
You look at what is resident within the Aetna business today. They have a tremendous amount of information that they can identify what is the next best action for the members that they serve to help them on their path to better health. Where the system breaks down is how do they activate that? How do they engage with those healthcare consumers? And
so now the CVS store and Minute Clinics are going to be the place where that happens?
Exactly.
Shares of CVS fell a fraction today in the trade.
Well, imagine going through an airport and never having to take out your ID or worry about carrying your boarding pass. That is now a reality for some passengers flying out of Atlanta's Hartsfield-Jackson Airport. Phil LeBeau has more on Delta's new biometric terminal.
Smile, your face is now your ticket on some of Delta's international flights out of Atlanta. That means from baggage check-in through security and onto a Delta flight, many passengers will never take out an ID or look for a boarding pass.
This is going to be an entirely biometric concourse where customers through facial recognition will not need paper anymore, starting in December to travel, as well as on the return back internationally.
How does it work? If you're flying internationally, you need a passport, which means your photo is in the U.S. Customs database. But instead of showing your passport when you check bags or go through security, as flyers have done for years, Delta's biometric system will already know you're scheduled for a specific flight. So when you stand in front of the camera, facial recognition software will quickly verify your identity, which means going through an airport should be easier and faster for travelers, who will no longer have to spend time looking for and showing their paperwork to ticket and security agents.
If you can save a little bit of time up front and get people into that queue faster, then hopefully this is making the airport screening process that much more efficient. People spend a little bit less time waiting. It's a little bit less stressful. There's a little bit less frustration on the part of travelers.
Other airlines are also testing facial recognition systems for boarding passengers. And the private firm Clear uses biometrics to identify travelers at many airports. So it may not be long before showing your ID and boarding pass will be a thing of the past.
We love it. Sign us up. We'll be first in line.
I like being quicker. There's always the invasion of privacy sort of thing that you think about, but safe and quick.
Adding biometric screening for domestic flights may take a little longer since there's not a national database as there is with international flights in the U.S. Customs and Border Patrol. But make no mistake, biometric screening and boarding flights through biometrics is rapidly changing the way we travel. Phil LeBeau, Nightly Business Report, Chicago.
And that's it for us tonight. I'm Sue Herrera. Thanks for joining us. And we want to remind you that this is the time of year your public television station seeks your support.
I'm Bill Griffith. We do thank you very much for that support. Have a great evening. See you tomorrow.